Alright. So today is gonna be class 1, part 2 of your introduction to trading, done by none other than yours truly. So if you're here, that means you should have probably watched Zaf's video on your basic introduction to trading, like how it'll be 80% psychology and 20% the rest of trading. So today we're just gonna take a different route from that. We're gonna be going through the technical terms, the more technical side of trading, like when it comes down to, what you're trading, how do the markets really work, what margin is, what leverage is. I'm pretty sure like these words might be kind of unfamiliar to you now, but after this, I hope that you can just get like a better grasp on, you know, what some of the technical meanings of, trading vocab in a way. Okay, so the first thing I want to talk about is NQ, ES, and YM. What are these? These are, indexes, and usually when people do day trading, especially like if you trade futures, these three indexes will usually be referred to as your triad of futures. So basically, what these are is, as you can see, Nasdaq, S&P, and Dow Jones. You can see the differences between all of them here. So basically, the simplest way to put it is people tend to trade more of the Nasdaq because it's usually more volatile. That means that there's more volume in the market. That means when you enter, you're more likely to enter. And when you want to get out, you are able to get out even easier. Okay. So the key idea of these three assets is that they are just correlated assets. That means they move similarly. So what this means for us is that we can get more confirmation with concepts like SMT divergences, which we won't really be kind of covering today. But yeah, in idea, in theory, you just need to know that having, these three assets to look at instead of just one and focusing on one kind of just lets you see it from different viewpoints, basically. Because as you can see, the Nasdaq tracks the top 100, S&P tracks the top 500, and then Dow Jones is just 30. But they just they're all correlated at the end of the day. So what this means is that, as you can see now, I'm on NQ, Nasdaq. And when I switch to ES, you can see that the chart is actually quite similar. This is what we mean by correlated. Like, although they move similarly, it's not completely 100%, the exact same. Yeah, there are some deviations here and there. And that's what typically we use to find better entries, in a way. Okay, so it's done. It's kind of easy to understand. What we're moving on to next is kind of tricky in a way, but I won't get into too much detail about it because that's just going to your like finance type of mainstream content already. For day traders, what we will need to know is that the advantages of using futures and why conventional day traders trade it the most. So basically, why traders use futures is that first of all, you can trade both directions, so long or short. If you don't know what long is, means that let's say you enter somewhere around here and then you buy here essentially, and then you get a TP here. That means you take profit here. This is your normal buy order, that kind. So this is your buy, and then you can trade something like this too, where you are essentially betting against the market for it to go down. But this is just really good, like overall, because let's say if you have a war or anything like that, you can just easily, you know, if you think it's gonna drop, then you can short it down. So it's not like a typical investment banking where you put in like 2% of your earnings and then you get 4% back in a year. Not like that kind of bullshit. You actually have some sort of substance that you can work with. You know what I mean? You can actually see where you're entering and you can actually just enter accordingly, whether it be long or short. Can. Okay, so moving on, we'll be covering like the technical terms of trading. First of all, I'm gonna cover margin. These all apply to live accounts essentially. And margin, super simple. You borrow money from your broker to open trades. So like here, if one NQ contract is like worth $300,000, literally nobody in like who's our age can really kind of afford that. So using margin, you basically just need like way less to open the trade. Simple. So leverage is borrowed margin to increase the size of a trading position beyond your initial investment. This is going to be a wordful, but the simplest way I can describe it is just the ratio. I mean, it is a double-edged sword, but it can both magnify your potential profit and your potential losses. So like let's say a leverage of 1 to 10 means that $1 of your money results in $10 in market exposure. What this means that if there's a change of $1, basically, you receive $10. Okay, so moving on, we'll be covering brokers and like how it's like the platform or company that connects you to the market, basically. Simple. You just read it yourself, you place a buy, sell order, the broker sells the order to the exchange, the trade gets matched with another trader, and then the price moves, you gain or lose money. It's basically the middleman of you and the market. And then popular future brokers include like NinjaTrader, Tradeovate, which I personally use, and AMP. But something that I have to warn you guys first is that if you want to open a live account using these brokers, they will usually require you to send like freaking credit card statements or like bank information, and like they'll get you to include a lot of shit to essentially, you know, make sure you're the person you say that you are. Okay, yo. So the next part that I'll be kind of going through is your literally in your entire trading journey. This will be your one and only best friend. Like you should not like be spending. I mean, you spend like I say 90% of your time here on this platform, and what you're gonna be doing is just constantly analyzing the market, just constantly finding entries. This will stick with you for like the entirety of your trading journey. So, in case you don't know what this is TradingView, and I'm using a brand new account because this is what majority of you are going to be looking at the moment you enter TradingView, and my job here is just to be it's just to prevent you from being super lost and just not going to be able to find what you want to find essentially. So first thing you're gonna notice that when you load up TradingView, like the app, is you're gonna met with a chart, the tools at the side, and then you have your watch list. So you have all your indexes, your stocks, your futures, your forex, your crypto. It's all in the side, and then you can press them to sort through each individual market. Okay, so simple. how to kind of go about this is that for us future traders, or like especially for me, I find all of this just completely useless. Like legit, all of this. If I could mass delete, I would, but I don't really how to. Yeah, something like that. We don't need a single one of these here. The main things that you need is just enqueue. You search it up enqueue. Oh yeah, you just press here, add symbol, and search up enqueue. Should be the first one immediately. See E-mini Nasdaq 100 futures. You add it to your watch list. And remember how I was talking about how NQ, ES, and YM are all like, is the triad. They are like the sisters. They cannot be seen without each other. Basically, what I'm gonna do next is just add ES, YM, and yeah, these are just mostly the main tree that you'll be looking at. There is something called mini MNQ, micro E mini Nasdaq 100 index futures. So basically, I mean, these two are the same markets, considering like they're both futures for the Nasdaq 100 index. But the main difference is that, let's say if I were to just do paper trade, I'm pretty sure y'all know what this is. Let's say if I were to place a trade here, you can see that if I were to put my TP at this high on micro E mini, it'll be $400. But if I were to do that on NQ at this high, it'd be 4,000. So this is something that y'all will have to know the difference between. And typically for newer traders who are, you know, who don't have a lot of funds, who are just getting started, you have like $100 to your name or something like that, they will usually just trade micro E mini futures. Why? 1 point on micro equals $5. However, 1 point on E mini, which is the normal NQ, is equal to $50. So that's what I was talking about, how like the advantages of trading futures is that you basically get to trade more on less. That's a very weird expression, but it's okay. Basically, all that you need to know is that when you're trading E-mini, every order that you place in is going to be worth more than if you were to put one for micro E-mini. So after you've added the original futures, so like the NQ, ES, YM, you can just add the micro ones if you're planning to trade that. So MES, micro E-mini S&P, and then MYM, micro E-mini Dow Jones. Shit, I didn't add it. MYM. Yeah, add that shit. Yeah. So you have all these charts, and as you can see, like what I was talking about just now, it's all correlated. So you can see that micro, ES, or YM, they're all correlated in a way for all three. Even for like the normal E-mini, all micros. Okay, so that's done for like our watch list. This is like mainly the 6 or 3 that you really need. So what I want to go through next is that is more of somewhat linked to psychology, but it's just something that, you know, all traders really do to kind of make life easier on their end, as so as to not like, you know, associate green as profit and then red as oh shit I'm losing kind of stuff. So for me, what I would do is that I'll change my bullish candles, which is these green ones, to white in color, and then bearish ones to black in color. I mean, chart colors, the preference is really up to you, and you can just change it to whatever really floats your boat the best. But honestly, yeah, the colors like I mentioned just now works best for me, so I'm just gonna be using that. Another thing that you will notice when you enter, the chart is that you have this weird thingy below. This is just your volume indicator, and I feel like majority of traders don't really use this one that's provided to you by TradingView, so you just go ahead and delete that. For indicators, I mean, we'll go through that in the next lesson. Personally, what indicators I use, but yeah, indicators are a thing. Let's say you can just, there's a lot out there, but for me, in the next lesson, I'll cover through what indicators that I use and I think that you should personally use also. Okay, what's next is these really annoying, you see these blue kind of rectangles here. So yeah, this is your electronic trading hours background, and I'll just like turn that shit off. See, makes it look so much cleaner. And another thing that I like to do also is these small little grid lines. I also want to turn them off. So if I'm not wrong, it's here. So I'll just see grid lines and I'll change it to none. See, overall just makes it super easier for you to see the chart clearly. Okay, to just briefly end things off, I'll just go through like your time frame, your keyboard shortcuts if you want, and also like how to just basically use all these tools here. Okay, so the first thing I want to go through is time frames. So as you know, you should know, if not, we're going through it the next lesson, is that each sort of candle really tells a story. And let's say this 1 hour candle can zoom it down into, let's say, the 5 minutes. Then you can see, oh, how the 1 hour candle look like is formed by a lot of, tiny 5-minute candles. It's just how to navigate time frames, which will help you go through that sooner or later. So yeah, if you want to change time frames, you just basically go through here, click desktop. You can have your minutes. If you want your seconds, I think you gotta get premium. Yeah, but your 1 minute is like your lowest time frame that the free user can really access, and then you have all the way up to like freaking 12 months. But tell me, who is using this for what good purpose? We're going all the way back to 1990s, bro. Heck nah. Okay, personally for me, the time frames I use the most is just like the weekly, the daily, and the hours, and then down to the minutes. It's kind of situational in a way, but the more sort of market experience you have, the more you just know which time frames to more or less look at. But in summary, your high time frame is just used to find your bias, your narrative. So whether you want to be trading long or you want to be trading short today. And then your lower time frame, let's say the 1 minute, is used usually to just find preciser entries. Like there are concepts that you can use here to just find preciser entries. Okay, so the keyboard shortcut for this is, let's say you press any number on your keyboard with like a blank screen, like this. Let's say 1. So if you press 1, it can be 1 minute. Then if you change it to 1H, it's 1 hour. Then if you change it to 1D, it's 1 day. And then 1M, 1 month. So you can go like 5. So it's 5 minutes. Then you press enter, change it to the 5-minute time frame. Simple. So what's next is just all the tools here. You have your Fibonacci. This is not how we usually use it. You have your own settings, but we'll go through that another day. So one thing that I want y'all to know when you are accessing your tools is that you can use something called the magnet. So the magnet mode, basically the drawings will be anchored to the closest open, high, low, close. So basically what that means is like, let's say I have a line here, right? If I have nothing near it, I can just freely put it wherever I want. But let's say if I want to highlight this low, the magnet basically kind of just attracts my drawing to the low, and then I can just draw. If you want to draw like a straight line, you gotta hold shift down, by the way, so that you drag it out. See, it can be like, yeah. So that's just more or less what you need to know. For all the different types of tools, you can just look through, figure them out. There are different tools for different purposes. Let's say you want to enter a long position, you can use this to track your order. If you want to like use rectangles, you can use like that. You know what I mean? And each tool will have their own individual settings that you can change. Let's say if I take the Fibonacci, I can go to settings and I can change all the values or the colors, anything that you want. And yeah, that's about it. Okay.